Hey there, investors. In this video, we'll be looking at GameStop. The ticker symbol for GameStop is GME, and the reason we'll be looking at GameStop is because of unusual option activity. We look at unusual option activity because we want to try to follow the smart money. The smart money, remember, is made up of large, sophisticated institutional investors with buying power in the millions. These are investors who are either buying large volumes of calls, thinking that the price of a stock will go up very quickly, or buying large volumes of puts, thinking that the price of a stock will go down very quickly. The great thing about options is that they give us a time frame, which is the expiration date on the option contracts. They also give us a strike price, which is where they think the stock price is going to move. And as investors, we can try to take advantage of that information by following their trades and take a more conservative position to try to make a return on our investment. Remember, investors, these videos are for entertainment purposes only. Please check out the disclaimer in the description below, as well as other information that is covered in this video. So with that, let's dive right into GameStop. So GameStop, the company, has been benefiting from that stay-at-home orders and the increasing trend of video game purchases. So because of what's going on with the pandemic, a lot of people staying at home playing video games. So that trend has been continuing, and a lot of new video games have been released lately. Big one being Cyberpunk and some releases of consoles like the PS5. So that is essentially what has been driving the trend in GameStop specifically, but in other game related or gaming related stocks. So you can see here that the stock is coming off of its lows and now going into its highs, and potentially could be reaching its previous highs. So let's take a look at what unusual option activity is telling us about the stock. And for this video, we'll be looking at coverage from CNBC, the option traders that are usually on CNBC covering their option trades. And remember, I have a subscription to some of these traders' forums, and their trades are usually pretty spot on as far as movement. And I wanted to share this with you guys so you guys can check them out, and we can try to see if we can take a strategy on some of the options that they're considering in the show. Let's take a look.
Okay, Doc, you're up. Unusual. Tell us what you got.
Let's do it, Scott. GameStop, GME, a big investor, has really been pushing hard and helping lift shares. We note that there are Feb 22 calls being bought very aggressively today. I bought those. That's probably in the neighborhood of a 30 to 60 day trade, Scott. Love the action in GME. Second one.
And in the video, he goes on to describe a second option contract that he's looking at, and I'd like to cover that specific part of the video in a separate video so that we can focus more particularly on the first call. So as you saw there, investors are buying large volumes of GameStop call options with expiration of the February time range with a strike price of 22. So let's take a look and see what that looks like in the unusual option activity detail. And that way we can sort of see what is driving some of that unusual option activity, and we can try to determine from the details what is going on. So let's look at GameStop here. You can see that right away the sentiment is pretty bullish. There's 72%, roughly 73, approximately 73% call options making up the majority of volume of option contracts. In contrast, there are 27% put options. So the sentiment is bullish, investors thinking that the stock will go up in the near or short term. So let's see exactly what is driving this unusual option activity. And to do that, we'll look at some recent news that has been going on for GameStop. So when we look for GameStop news on Google, and that's just Googling GameStop and searching for news, we see that a few articles stand out right away. GameStop poised to grow in 2021 and beyond, short at your own risk. Them continuing to close down to downsize and be more agile to survive sort of the pandemic. And the stock soaring 29% to multi-year high as Chewy co-founder ups investment in stake in GameStop. So if we look at the first article there, we see that there's a pretty good analysis of what has been going on with the stock, and you can see the main summaries of this entire article, which I will be posting the links to down below, and it's good information, so I recommend you guys do check it out. But in summary, the gist of the article and what they're saying is that GameStop, basically their argument is that GameStop is not a stay-at-home stock and should see favorable conditions with the recovery that will come in 2021 after the pandemic ceases or slows down. So there's been a lot of market sentiment lately of a strong recovery in certain stocks and certain industries, and it sounds like GameStop could be a beneficiary of that trend that will come or would come, or maybe will or will not come because of the recovery from the pandemic. Also, that they're pointing out that GameStop plays an important role for consumers and publishers of video games in the industry. So that's also a key indicator that as new games are released, the company is still very relevant for both gamers and the companies that are releasing these games. Another important thing is that the company is facing no liquidity issues. So that being said, bankruptcy or the risk of bankruptcy is completely off the table. And they go on to explain it, meaning basically they definitely have more liquidity to cover their short-term liabilities and are able and will be able to raise capital for any long-term liabilities that they do have or undertake in the future. So pretty much strong liquidity means that they have a lot of cash on hand that they can use to execute or put to work for either investing in capital or investing in growing their operations. So that is a very strong sign. Additionally, they point out the investment made by Ryan Cohen, he is a co-founder of the company Chewy, an online pet company that sells pet supplies and things of that nature via online that got bought up by PetSmart. So strong buying from the investor, and you can see that from the previous article as well that was listed back in the news section. So you can see that co-founder of Chewy, Ryan Cohen, continued to add his stake to GameStop, according to SEC filings. And in September, Cohen approached GameStop board with a plan to turn the retailer into a specialized e-commerce behemoth in the video game space. So Cohen is betting big that he'll be able to, along with the support of the board, turn around the company to transition into more of an e-commerce platform, which, if you're bullish on GameStop and the company, would create more returns for investors. So similar to how Cohen turned Chewy into the e-commerce juggernaut for pet supplies. So good analogy there to Chewy and what he ended up doing with Chewy. So now that we kind of know what is driving the unusual option activity based on trends and the sentiment and some of the news that we see, let's take a look at what positions investors are taking in options specifically. So when we look at the options for February, which the investor on CNBC mentioned, we can see right away that investors are placing a big bet for the stock price of GameStop to go to $22 a share. Now, this is pretty indicative of the movement. So we see that 22 strike price for an expiration of February comes out to be roughly, of open interest, comes out to be roughly almost $2.9 million in this bet. So investors are betting big that the stock price will reach a strike or a price of approximately $22, which is very bullish. And as you can see from the news and articles that we read, the trend is likely to follow in the investors' favor as more positive news comes out about this increasing trend and demand for video games. So now that we kind of know what position these large investors are taking, let's take a look at some stock analysis and technical analysis to see if it's likely for the stock to hit the prices that investors think it will hit, which is roughly this 22 strike price. So to do that, we're going to go into investing.com and take a look at the chart, specifically the candle 1-day chart. So when we're looking at the candlestick, we see right away that the stock has had support levels here, and then a few support levels here, and then also notably has had levels of support and resistance roughly around here. So right here, the stock was consolidating, and this level served as resistance, then went up and then came back down, and then also served as a level of support for the stock, and then from there the stock kept climbing. So we can see that based on this trend as well, from this level of support to this level of resistance, it came back down to the previous level of support and then surpassed this previous level of resistance. So now there's a good probability that the stock will continue to climb to establish a new level of resistance, or settle back down a little bit and either hit back this, make this level a support, or create a new level of support somewhere up here. So there's a good probability that the stock will continue to climb. And as we can see from the moving averages, specifically the 5-day and the 20, these averages have pretty much crossed the longer moving averages, meaning that the stock is likely to, that the trend of the stock going up is likely to continue as these averages gain momentum, pushing the average price of the stock further and further up. So that right there, we can see that it might be likely that this strike price will get reached. So now that we kind of see that, let's take a step back and kind of see a little bit more of previous levels to see kind of where the stock could go. And right away, guys, you can see that the stock has gone up way above the 20 strike price. So a call of 22 would be fairly reasonable within that range, as the stock has previously seen those levels in the past, as seen here. So now let's take a look at roughly what our position will be and why if we decide to take a strategy on this. And to do that, we'll look at the trade details laid out. And this detail lays out the idea, or the trade idea, for what strategy we would take if we were to follow these investors in their bullish call of GameStop reaching a strike price of 22. So when we look at that, we see GameStop closed roughly at $20.31. And the trade really would be to buy the February 19, 2021 expiration calls for the $22 strike price for $3.55. And a good entry point would be with the stock above the last low of $19.95. And these levels are all based on technical analysis and previous levels that the stock has reached in the past, which I will point to in a few moments. So when we're looking at target levels, our entry point would be around the stock above the previous low of 1995, and then we would consider taking profits or closing the position at 2110, 2206, 2235. So at these levels, you can consider closing the position or rolling it and getting contracts if you think the price will continue to climb further out into the future, or trimming if you have multiple contracts, either volumes of 2 or more. So our stop loss or our stop price would be with the stock trading back down to the previous low of 1995. So if the stock comes back down to 1995 and below, we'll start seeing that the momentum or the sentiment of the market has turned, and then we can probably take a bullish or a bearish position in the stock. So this right here indicates our bullish scenario, which is where the smart money is going. So just like to point out that this is the focus of the trade idea. However, if conditions don't end up going in the direction that these institutional investors think it will go, then on the other side, we can hedge our risk by taking a put position. So if the sentiment turns bearish in the market, we could potentially get the February 19th expiration calls or puts for $19, trading at around $3.65, with our entry point being the stock at $19.95. And then from there, our target levels where we would close the position or take profits would be these. And our stop loss for our put position would be with the stock climbing back up to $19.95. So if the stock climbs back up to $19.95, then we know that the trend is not in the favor anymore of a put position. So just to recap, these levels are based on previous levels of resistance seen here. So you can see here that the resistance level of 2110 comes from our daily levels. So we can see that from our pivot points. I believe it was actually here, you guys. So yeah, so 2110, our first level of resistance, with the stock following at 2206, our second level resistance, and then our third level resistance of 2235. And then our close position here, and then on the put side, our support levels would be levels at which we would close our position. So there you go, investors. Let me know what you think about the trade. Let me know what you think about GameStop. Remember to like and subscribe if you found any of the information in this video useful, and stay tuned for more videos. Thank you.